middle powers must act together because if we're not at the table, we're on the menu.
Somewhere Europe has to grow out of the mindset that Europe's problems are the world's problems, but the world's problems are not Europe's problems.
चुन चुन करके हिसाब लेना ये मेरी फितरत है.
Why should it be a problem? If I'm smart enough to have multiple options, you should be admiring me.
भारत झुकने वाला भी नहीं.
The rise of India will be determined by India. It will be determined by our strength, not by the mistakes of others.
The old order is not coming back. We shouldn't mourn it. Nostalgia is not a strategy.
Hey guys, welcome back to the channel. Now, around 90% of global trade moves by sea. And none of these ships can move without insurance. Why? Because of the risks involved. And if anybody doesn't know about the risks involved into the maritime shipping and all that thing, then you have to look at the Strait of Hormuz, what's going on over there, right? And I'm not going to talk about Strait of Hormuz. Once again, I'm making this very clear because sometimes it creates confusion. Now, coming back to the point. See, without insurance, ships cannot dock at ports, they cannot secure financing, and cannot legally carry cargo. You have to have some sort of insurance that is approved by the world community or, whatever the body is for that. And this gets very interesting when you find out that 90% of the world's ocean shipping is insured through clubs connected to the London market. Just one or two clubs are there, that's it. Like one of the institutions is like Lloyd's of London, and the second one is called International Group of Protection and Indemnity Clubs. That is, in short, they call it PNI. And they control the 90% of the market, and the 10% of that market is basically held by who? The government insurers. Okay. This means that maritime insurance sits inside what? Same Western financial and legal system that bolsters the dollar dominance. Now think about it this way. That dollar was the currency that literally killed sterling pound, the United Kingdom's currency. And still, in spite of all that, still Lloyd's of London and PNI, they offer the insurance only in dollar. Now, once you understand this part, right, you start seeing how powerful that system really is. And you have seen this you have seen this with the Russian shadow fleets, you have seen with Iranian oil sanctions, then you have seen what happened in Venezuela. Now you have seen this, what's happening near the Strait of Hormuz, right? The American blockade per se, right? So if you enjoyed this kind of video system level analysis on global power shift and emerging world order, make sure to like and subscribe. Please don't forget to hit the bell icon, okay? Now, because today we are going to talk about how India is quietly making the moves against one of the hidden weak spots in the dollar system. So let's get going. Let's get started. Please do like and subscribe, all right? See, so once you understand that maritime insurance sits inside Western financial system, then the next question becomes very obvious. The question is, how is that leverage actually used? Or in layman terms, how is that abused? Or how is that weaponized, right? Now, if you look into the Iran's case over the last decade, maritime insurance has quietly become one of the most effective enforcement tools in the global sanctions. In case of Iran, right? Sanctions have been imposed on Iran for a long time now. There are different layers to the sanctions, and ultimately it starts with primary, secondary, tertiary, like that, and then ultimately it reaches to your supply chain, the maritime shipping, and all that. Okay, so what they have done is that Western governments have restricted maritime insurance coverage for tankers transporting Iranian crude. This is why US is putting a blockade near the Strait of Hormuz in hopes that they can control all that too, so that Iranians cannot sell their oil. Okay. Now let's talk about the leverage little bit briefly here. Let's look at the example of what? Venezuela. What happened in Venezuela? In Venezuela, first of all, when Russians were hit with sanctions, they lost their port access to South American continent. Every country that was there in South American continent, Russian ships couldn't access that. Okay, unless it is a shadow fleet, and that's what happened. Okay, including Venezuela for Russians. Russians lost their access to Venezuela and others. Then came President Trump. President Trump said that okay, Russians are gone from here. Now we need to handle who? We need to handle China. How do we do that? See, America's problem with China or Russia or India is not that China is buying oil from Venezuela. Hey, that's what the oil is for, somebody to buy it. But buy it in what? Dollar. Okay. And Venezuela is sanctioned, so Venezuela cannot sell oil in dollars to any other country. So, where was the problem with China? The problem with China was that China was helping Venezuela bypass the dollar sanctions. China was telling Venezuela to use yuan instead. Now, imagine this, that every country that is sanctioned is somehow bypassing the sanctions. Like, for example, Russia. Russians bypassed it. Russia is a powerful country, so Russians were able to bypass it, but Venezuela couldn't. Right? So they took over Venezuela so that Venezuela cannot bypass the sanction. That was the main problem with China. All right. And when Irans were hit with sanctions, then Iranian oil export practically collapsed from roughly 2.5 million barrels per day in 2011 to around 1 million barrels per day within few years. And all that oil that was there, China was buying all that oil in yuan, and Iran was using that yuan to buy things from who? From Russia, then buy things from North Korea or any other country that was there. And one of those countries was UAE itself. Okay, so its dynamics has been the same. Okay, now when Russians were hit with sanctions, then Russians responded by assembling a shadow fleet estimated at more than 600 vessels. Like India is building a fleet of 100 vessels, okay, operating outside Western insurance systems. So Russians have 600 vessels that are operating outside of Western insurance systems. So whenever a ship or anything is outside of Western insurance system, that is Lloyd of London and PNI, they call it a shadow fleet. Okay, so and this is the leverage. You also see this leverage where during the geopolitical crisis, like his Strait of Hormuz, right? We talked about that. Anyways, so in other words, what's happening is that maritime insurance is not just a financial service. It's a strategic control point inside the global trade system. It's a leverage. It can be weaponized. Like, for example, look at we talked about Venezuela weaponization, right? Now let's talk about the Greenland weaponization. What happened in Greenland? What happened in Greenland, Canada, all that situation when President Trump said that we want to take over Canada as 51st state, then Greenland. See, the problem over there was that he wanted to, there are some very narrow waterways in that region, okay? And he wanted to control those waterways so that all that will fall under Western maritime insurance. Right now, it's all open. It's all wide open. Either it is Russian territory or it is Norwegian territory or something. Okay. But the open waters If you there are certain islands and all, if you control those islands, then they by building certain infrastructure, you can actually control those waterways and bring them into what, into the maritime insurance fold, the Western Maritime Insurance. Okay, that was the whole idea behind it. All right, so once you start to see the system clearly, okay, the next question becomes very unavoidable, right? What happens when a country depends heavily on the maritime trade? Right, we have a bigger problem. Let's say you are heavily into maritime trade but does not control the insurance system behind it. And this question brings us directly to India's case. Okay, so let's go talk about that part. Now let's talk about India's energy vulnerability. Okay, see, India's economic growth depends heavily on imported energy because India doesn't have crude oil. India has largest refineries and all, but India doesn't have the crude oil. And India imports most of its natural gas. So the country actually consumes roughly 5 million barrels of oil per day and imports 85% of that demand. And that makes India third largest oil importer in the world after China and the United States. And Russia-Ukraine war, first of all, disrupted the market, right? After Russia-Ukraine war disrupted the global energy market in 2022, India dramatically increased the purchases of discounted crude oil, the Russian crude oil. And they were giving India almost a $10 discount on every dollar on how do I say it, on the standard Brent crude pricing. So if Brent crude was $65, then India was buying Russian crude at $55 per barrel. Okay, so what happened is that before the war, Russia accounted for less than 2% of India's oil imports, and today Russia supplies roughly 35 to 40% of India's crude imports, making it India's largest supplier. Now, 40% of India's crude imports, but you have to understand that still India has to find ways to import rest of the 60% of the crude. And India's problem is not just the crude. 45% of India's natural gas comes from Qatar. So India has to figure a way out now to find the alternatives to Qatar plus rest of the natural gas needs, right? So today, what India is doing is that India now imports what, more than 1.5 million barrels of Russian oil every day, and now India is working to import more natural gas from Russia too. And I have made a video on this whole thing as to India and Russia, how they are each other's strategic backup. You have to go check that video out because it's going to be a very good eye opener for you. You will understand how two countries that seemingly they talk about, non-alignment or multipolar world, strategic autonomy and all that, but they're working together to actually create a strategic backup for each other. Okay, so the interesting part about India-Russia trade is that almost all of the oil and natural gas arrives by sea, which means India's energy security ultimately depends on not only on shipping routes but also on insurance systems that allow those shipments to move. Right now, if India wants the energy security, even though Americans say it a lot, oh, we are extending India's license and this and that, we are not going to sanction India for another 30 days. They act like they have the power or something. But reality of it is that India has been importing Russian oil regardless. So now, since India is importing Russian oil, they're trading in national currencies and all. But the problem is that they don't have the Lloyd insurance. They don't have P&I insurance. So how India is going to ensure its energy security without all that insurance, right? Let's say if insurance markets suddenly refuse coverage for tankers carrying sanctioned oil, like in Russian case, right? Or entering high risk waters, shipments can stall almost overnight, right? So India does not want to get into this whole Middle Eastern type of situation once again. So they want a security guarantee, right? So, and because of all these risks technically they create structural vulnerability, and India basically clearly understands that risk. So it decided to reduce its dependence on foreign insurance systems, and this is why India has done two things. So to address two of its vulnerabilities, India did two things. Like to address the oil risk and all that, to supply chain vulnerability, India did two things. Number one is that India is building a fleet of 100 vessels, 100 ships to for this whole crude oil purposes. And second thing that India does just recently is the government of India approved the creation of Bharat Maritime Insurance Pool. So what this pool will do is that this pool will provide insurance coverage capacity of roughly $1.5 billion per incident, backed by sovereign guarantee of about $1.3 billion, meaning that India will cover 100%. $1.3 billion will be returned if based on the damage and all that. That's the guarantee of it. And normally the insurance provide these type of guarantees so that more and more banks join that club and more ships join that club. Okay, and lots of Russian ships have already been added to that insurance coverage, the Bharat Maritime Insurance Pool, to that pool. So what it will cover is that it will cover several critical risks in maritime shipping, like for example hull and machinery damage to ships, cargo losses during transportation, protection and indemnity liability for ship owners, war risk insurance for vessels operating in conflict zones. So it is covering the war risk as well. Okay. So India's national insurer, General Insurance Corporation of India, will support the system. And that's when here's the interesting part, that when India does this, General Insurance Corporation of India, now you have to understand the trick here. Who is going to fund General Insurance Corporation of India? Think about it. General Insurance Corporation of India will be funded by the countries whose currency India will be using to pay Russians and India will be buying oil from. Like for example, UAE, Russia. Now India and Russia do the trade in what? National currencies. India and UAE do trade in national currencies. So what's gonna happen is that the rupee that Russians get, what they're gonna do is that they're gonna take that money and they're gonna invest into General Insurance Corporation of India. What will that do? The profit that will come out of that is gonna be Russians will make the profit off of it, right? And that's the smart move, meaning that you create the opportunities and at the same time you are minimizing the risk, right? So what does this mean? This means that ships operating with India Trade Network will have access to sovereign backed insurance coverage, even if international insurers withdraw from politically sensitive routes. Now, and like I said, that on the politically sensitive routes, what's going to happen is that countries that are involved into it, that have the most to lose, that have the more liability and all that, they are the ones that are going to invest into General Insurance Corporation of India, which will provide the insurance to all these things, right? So at the surface level, actually this may look like a technical policy change and all that, but once you sort of zoom out of it, then its strategic implications become very clear, right? This is not just about what this maritime insurance is not just about shipping risk. It's one of the hidden pillars supporting the global dollar system that I have said before. So When you do this, what's going to happen is that more and more countries may join. Because if let's say I'm just going to explain it to you a little bit, okay? Let's say ships are coming from Vladivostok to Chennai corridor, right? They're going to come from Malacca Strait and all too. So chances are that Chinese may get involved into it. Chinese may start investing into General Insurance Corporation of India too. They may say that, okay, we will invest in here, and as part of our trade, because we have lots of trade imbalance, so how about we invest into it in yuan or something, and we are good to go. We both are the party to it, and if somebody does something, then we will take action together. So it's opening lots and lots of horizons at this point. And the countries that are actually in the region, for example, the UAE is there in that region. Then you have Sri Lanka, Bangladesh, Thailand, Indonesia. Then you have Taiwan, China. All these countries are there, and Russians and all, right? They all may actually join the insurance. Same thing India can do, because if you are going into international Chinese waters and the international waters and all that, then who is there to actually help you? Otherwise, you're going to deal with lots and lots of piracy in those waters too. So the only way that's possible is when all these countries will start to cooperate in managing the risk. You get where I'm going with this? All right. So let's talk about how this whole thing is actually hitting the dollar system. This is one of the weak spots of dollar system. You have to understand this, okay? So let's talk about that a little bit. See, maritime security is becoming the next geopolitical battlefield. Now, what India is doing here may look small, right? But 100 ships, some insurance, this, that. But it points to something much bigger. Now, as I've talked about the global trade infrastructure that was developed by the Western, this, that, then Western financial centers like London and New York and all that, right? Shipping finance, maritime insurance, commodity trading, legal arbitration all became deeply integrated into that system. And because of that integration, Western government gained what? Enormous leverage over global trade. So when you see all the problems in the Strait of Hormuz and all that, right? When you see that problem in the Strait of Hormuz, nobody came to help President Trump and all. So it's not because all these Western countries all of a sudden they have some sort of awakening or something. They have nothing against the United States. They have personal vendetta against the President Trump. The moment President Trump leaves the office, I can guarantee you that these Western countries are going to sing the same tune. Point being that the structure that's there, it's not going to change. All right. And because of why would anyone want to give away their leverage, right? And with their leverage, Western countries, they could restrict the banks. We have talked about that. They could restrict payment system, they could restrict insurance, and they could restrict pretty much anything. But what's happening now is that after the rise of the civilizational states, okay, civilizational states like Russia, then Russia, China, India, and all that, okay, these countries are basically beginning to build parallel infrastructure. They are creating multilateral institutions. All these multilateral institutions and the parallel infrastructure right now is sort of small. It's not going to challenge the current system in a very big way, but it will do the job. Okay, it will fulfill the needs of these countries. Okay, like Russia assembled what, a shadow tanker fleet to bypass Western shipping systems. China has been expanding domestic financial and insurance capacity while developing alternative payment networks and all that, right? Iran has operated sanction resistant shipping networks for years. And now India is doing something similar, right? Just like I talked about, right? Not by building a shadow fleet or something, but by building insurance independence, right? So what you do, mechanism is like I said earlier, you ask the participant countries to invest into it. countries that are going to trade in national currencies. So which means that you will see more and more Russia and India trade growing. And all Russia has to do is take that money and invest into the insurance market. Okay. And so what's going to happen is that once a country basically controls the shipping, payments, and insurance, it becomes much harder for external actors to disrupt its trade flows. And when you have a parallel system running, especially for a powerful country, I mean, China is not Iran, right? If China is running a parallel system, you really believe that Americans are going to fight China? No, they may talk about all that, but they won't be able to do anything. Okay. So, what does that mean? In other words, what maritime insurance is quietly becoming one of the next battlegrounds in global economic competition. What does that mean? It means that the civilizational powers and the global south countries, they're slowly and slowly what they're doing is that through their parallel systems, they are breaking away and decoupling themselves from the dollar based system. Okay. and I'm going to talk about the 4 weak points of the dollar system. Okay. In the starting of the video, remember I told you that this video will be very important for the de-dollarization lobby, the de-dollarization gang, the group that wants somehow de-dollarization to happen fast and all. So I'm here to tell you this, that until those 4 points, the 4 weaknesses are not hit, nothing is going to happen to the dollar. And one of the things is this maritime insurance that I just talked about. Okay. And that India is building this infrastructure. So unless this happens, nothing will change. Okay. And this is going to hit the dollar, not because dollar system will collapse, but because countries will slowly and slowly start to reduce their dependence on it. So it's not gonna be, dollar is not going to be a priority. It will become a optional thing, that okay, yeah, if we cannot trade in your currency, let's trade in dollar. All right. So it will become an optional currency or optional system. Let's just say that. Okay. So, and this is how the global systems normally they evolve, not through dramatic confrontations the way it's happening in the Middle East, but through quite structural adjustments. And India's new maritime insurance system is one of those adjustments. I said four pillars are there for dollar strength, and one of the pillars is being hit right now. Okay. And slowly and slowly you will see others hitting too. Other one is CBDCs. And we will talk about all that in other videos. All right, guys. So this is it for this videos. And please do like and subscribe. I hope you learned something. And I will talk to you guys in another video. Take care.